Now then, let's start in the realm of monetary policy today. The South African Reserve Bank took markets today pretty much by surprise by deciding to keep its policy repo rate effectively on hold. The market was pricing in a second rate cut at one point, essentially considering that inflation that is comfortably within the band, the usual band of 3 to 6%. Now, the bank cut rates by 25 basis points in its meeting in July, bringing the prime lending rate down to about 10.25%. It provided some welcome relief to South African consumers who are hoping for further rate cut at this meeting. But the bank's MPC committee agreed to essentially err on the side of caution, citing a number of risks to inflation in the months to come. The bank also did revise its growth outlook marginally high to 0.6% from just 0.5% for this year, but he noted that growth remains constrained. The Reserve Bank governor says Iran's movement will have to be very closely monitored as a key upside risk to the inflation outlook.
The prospect of a further ratings downgrade persists, particularly given the increased fiscal challenges and political uncertainty. The narrower current account deficit and the global environment remain supportive of the rand. However, should inflation and/or growth surprise on the upside in Europe and in the US in particular, we could see a faster pace of monetary tightening, which could impact on capital flows and the rand exchange rate. At this stage, the markets appear to be pricing a high probability of an increase in federal funds rate in December and 3 further increases next year.